All opinions and views expressed by the speakers are not representative of views and opinions of RBC Dominion Securities, Inc. All information and opinions provided in this video are in good faith, but without legal responsibility.
No one likes paying more taxes than they have to. Let's talk about smart ways to keep more of what you earn in 2025. A well-structured investment strategy isn't just about growth, it's about efficiency. In Canada and the US, certain accounts offer tax advantages that can help you minimize what you owe. For example, TFSA contributions grow tax-free, making them ideal for investments that generate high returns. RRSPs give you an immediate tax deduction, while non-registered accounts benefit from capital gains treatment, which is taxed more favorably than regular income. And if you invest in the US, you'll want to ensure you're structuring your portfolio in a way that aligns with both Canadian and US tax laws to avoid unnecessary taxation. Small changes to your investment strategy can lead to big tax savings over time. Let's review your portfolio and see if there's opportunities to optimize for 2025.